Hello, everybody. Welcome to this week's edition of the Grain Gauntlet. As always, 5 questions from current clients and potential prospects coming off of a USDA supply and demand report that did some interesting things and that sparked quite a few questions. So with that, this is Patrick. I'm Josh. You ready to go?
Ready to rock.
First question, why did prices rally after what seemed to be a neutral to bearish USDA report?
The same reason they have been rallying, I do believe. I don't think it was funds buying or liquidating the shorts that caused the move higher. I believe it's commercials. 1 year commercial, you got a lot of orders in the fall. It's the greatest movement of corn that there is from farmers to end users. Okay. I think they got a lot of orders sitting there that need to be filled. Bottom line is you guys having to bill them. Okay. The market is estimating very low forward pricing this year because, again, for the second summer in a row, we didn't get a rally, okay? So with that said, how do commercials get corn out of your hands? They push up a rally. Rallying from 392 to 430, right below technical resistance. That is absolutely key because you don't get farmer to sell when it's rallying. You get farmer to sell when he starts to panic because it's go back down. Bringing up the technical resistance, everybody's been talking about it. Now it holds and it starts to go down. Now the farmer panics and sells at 415 because it doesn't want to sell at 390 or worse. That's how you get bushels out of your hands. We are preemptive in that. We're already hedged in covering the downside. And I grouped up some hedges to be safer at this level. Contrarian is the key to be successful in this peel.
All right, good. Well, this next question ties into that, and I think is the question that automatically is on everyone's minds. It's why I think some people thought we rallied on Friday. So here we go. It says, do we avoid harvest pressure if yield reports are widely disappointing?
No. We're growing so many corn acres this year that no matter what happens, we're going to have a glut of corn at the maximum intensity of harvest. There's going to be too many bushels to push. I see very little risk for a rally with all those bushels coming to market over the next month and a half. Will we fall as much? Will it be as significant if the yields are disappointing? No. But will we more than likely fall compared to rally at this point of year? 98 million planted, 90 million harvested corn acres. The answer is we're going to see prices fall.
Yeah, I know there's a lot of people wanting prices to just keep going up from here, and they're putting a lot of that hope in the idea that yield is just going to keep getting worse, and that's behind what we saw in front.
I wish that was the case. I'm praying that's the case. There's nothing more fun than dealing with you guys when prices are rallying. When prices go down, that's like dealing with a grumpy doll, okay? So it's just not as much fun. I'd much rather have prices rally, but let's be real. Where's your risk?
Exactly. All right, next question. Where are you now targeting a buyback with corn?
This is going to surprise everyone. It's not a price. It's mid to late harvest. It's a time frame because the time frame is most relevant right now. When are we going to see the greatest pressure on prices? So when we got corn laying bags on the farm, or we got commercials saying, I'm not taking any more corn now. We saw that last year in Iowa, but they were only open, end users, elevators open 1 day a week, right? And they're not taking anything besides that 1 day. We're going to see that again this year because we're harvesting so many more acres of corn than soybeans. When you harvest soybeans, you're harvesting 50, 52 bushels a acre. When you're harvesting corn, it's 180 bushels. There's a lot more corn that goes, there's a lot less corn that can fit a 40,000 bushel bin. Let me put it another way. You got corn, got 40,000 bushels that you can fit in your bed. You got beans, 40,000, you fit it in a bit. Now you planted a bunch more acres of corn. It's going to take up more bin space, guys. We did that across the whole nation. It's going to take up more bin space. We're going to have a glut of corn, and that's going to pressure prices.
Right. You're looking to clear that one last turbo as opposed to a specific price.
Yes.
Good time frame. Yep. All right. When will you make additional soybean sales?
When I think a bottom is in, which sounds really weird, but when I see a bottom is in, because it keeps rallying, break, we'll keep holding off until we get price we want. If it goes down at harvest, the safest buyback is at harvest lows every year, at least probability wise, right? So if I have to move something at a cruddy price, I'll buy it back when I have to move it at a cruddy price. It's a direct replacement. I'm not really selling it. I'm just locking in basis, really. That's all I'm doing. Nano basis sticks.
Okay. All right. And final question. This one's from a prospect. Kind of ties into everything that's been going on here. Says, I wasn't following at the time you locked in basis on the corn you just priced, but I will have to sell off the combat. Would you recommend I get priced regardless of the basis I can get?
Unfortunately, yes. Thank goodness you're listening to us now, because we were able to lock in a pretty good basis on additional bushels in August, and that basis has got wider. It's not going to get better unless you're in places like Ohio, where the crop just isn't as good as it was expected to be. They had a tough year. In areas where the crop isn't gigantic, you can take a risk, right? But in most areas in the Midwest, basis isn't going to get better till well after harvest.
Yeah. Again, this is about risk management. This is about you have to sell off the combine. You'd be taking the risk that the price is just going to go down further from here.
Yeah, and too many times we're penny wise and pound foolish. Okay, basis is 20 cents wider. I don't want to sell. So you don't sell, and you don't do a buyback. And you have to pray for a rally, right? But if you have to sell at the combine, you have to sell. Okay, or Hedge commercial store, now you're paying another 24 cents or whatever it is, and makes that price way lower. If it doesn't rally by the time you have to price it, you got a really terrible price. Cut your risk, buy it back on the board. It's the same thing as a basis. Well, basis is 20 cents wider. I don't want to sell. That's penny wise. You're not going to sell because of wide basis, but you're going to miss $1 moving the futures. Yeah, you only net 80 cents, but that's better than taking a wide basis and not buying it back.
Okay. All right. Well, that's all for this week. Thanks again for all the questions, everyone. If you have a question you want to have answered, please email it to adminstaff@hedge-plus.com. And everybody, I hope you have a great harvest.
Talk to you soon. Stay safe out there.